Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Okay, here's another question. This is a good question. Renfu, hopefully I pronounced that correctly, asked, one of the questions in his head for the long time is that he knows that volume is one of my building blocks, and yes, it definitely is. But in the spot market of FX, do I use tick volume for, oops, lost the question. But it's basically, do I use tick volume to help with the timing? And really, I don't. What I use, for those of you that are trading things like the spot market and looking at volume and wanting to find volume on that, there's a number of brokers that are starting, a lot of the larger brokers are starting to show the volume for the trades that are going through on their platform. So it's not the volume in the entire FX market, but it's the volume on their platform. And if they're a large enough broker, like say MB Trading, for example, then you can look at that volume. I find that it's most helpful on intraday charts. On daily charts, it's not really quite as useful, but on intraday charts, it certainly can be. So you can look at the volume of what's going through on their books and use that to help you. For example, with these breakouts, let's say we're looking at this breakdown here. Typically, what you want to see is volume to be dropping off as this correction is forming here. And the more it drops off at the very end, right before it triggers, that's going to give you a heads up that it's really close to giving you that trigger, and you really want to be right on top of that thing at that point. So that's a good way that you can use volume. But a lot of times when you're looking at just the straight FX, you really don't have the option of using volume. So it's one of those, even within the building blocks, even when you do have volume, it's not always a strong con if the volume's not in your favor. It can be a pro if it is in your favor, like if the volume is dropping off here. But it might not be a con if it's just the same throughout that entire trading range or throughout that entire congestion. It doesn't necessarily mean that it's working against the strategy. It's just a stronger strategy if it's working for it. Does anyone else have any questions at all? It looks like you guys are a little bit of a quiet bunch today. I've never had that happen before.
Toni, what about different time frames? I'm not sure if you answered that one. Mm-hmm. Can you use it to be a very, very short term, your methodology, and can someone that's a swing trader that's looking to trade these currency options and maybe look out over a number of weeks, can you do that using your methodology or your thinking?
Oh, of course, definitely. I mean, one of the clients I work with on one-on-one, actually on pretty much a weekly basis, that's what she does. She focuses on some of these different time frames, mostly day trading and the swing trading using these FX options. And that is a key part of what we're looking at is we're looking at how these strategies compare from one time frame to the next. And what you find is that they're really identical. Sometimes you have some differences in terms of if you're looking at, gap type of strategies versus like a typical swing trading type of strategy. But overall, there really isn't a lot of difference. Of course, with the options and stuff, you are dealing a lot of times with gaps if you're just looking at intraday charts, and that can affect the positions. But overall, it really is a type of market analysis that you can apply not only to different asset classes like the options, like the futures, like the ETFs, but you can apply it to any time frame, even a tick chart, where you are literally trading off every tick that is being established within a security. And when I'm scalping, a lot of times those are the charts I'll use. I'll use like a 100-tick chart. I'll use like a 500-tick chart instead of using, say, a 5-minute time frame or a 10-minute time frame. And I use the exact same strategies on those that I do when I'm doing longer-term investing strategies. So really, these do apply no matter which one you are looking at. Yes, Harold actually asked the same question pretty much. Can you use multiple time frames to confirm entries and exits? And really, you definitely want to do that. I always use multiple time frames. When I have my charting platform up, in fact, my entire charting platform, when I'm scanning, up here I'll have a daily chart. Here I'll have a series of intraday charts. Sometimes I'll overlap them here, like this. And then some really short-term time frames, and then a weekly time frame, and longer-term, weekly and monthly. And so here's my market minder, my list that I'm scanning through. Here's my level 2. And as I'm going through this market minder list, it changes all of these charts. So I'm really looking at the entire picture. And then if something pops up on one of these time frames, I'm like, wow, I see a really strong pattern developing here. Then I will use the other time frames to really confirm that. So here might be, this is typically my daily one. Here's a 15-minute. Sometimes I'll change this to a 30 or a 60 minutes, depending on what I'm looking at. This is a 5. Usually this is a smaller for day trading too. Actually, I believe I have a 100-tick chart up there now, and then the weekly and the monthly. And so when I'm trading off of a daily chart, let's say I see something setting up there, then I'm going to check the weekly and the monthly to see where the larger trend placement is for it. And then I'm going to drop down to these intraday charts here for timing that daily setup and really looking at the details of what that daily setup is. Jeff, what's the difference between pace and momentum? There's really not. Pace is just a different word for momentum. Pace is the word that I used from the very beginning when I started teaching this concept, and a lot of people have, referred to it as momentum since then. So I've kind of added that so that people don't get confused. But it's not like an indicator. There's not like a specific indicator or oscillator that I'm using, which is a lot of times when people are saying momentum, they're using a momentum oscillator, which is another type of thing that you can use on your charts, such as down here, to measure the momentum. But I don't really use a lot of indicators on my charts, so my charts are pretty clean. I use candlestick charting and volume and some moving averages, and really that's about it. I would say I do use Fibonacci, but I kind of use it in my head instead of drawing the levels on them anymore, because I kind of have an idea of about where those levels are going to fall. But Fibonacci levels, retracement levels, extension levels, those work really well when you're dealing with Forex. Let's see here. Another question. What percentage of my trades are FX options? I actually don't trade a ton of options. I work with a lot of clients that trade options, but over the years I've stuck primarily to individual securities, ETFs, and the futures market. So what I teach with options is I don't go into like the different put and call strategies and that sort of thing when I'm teaching them. I'm helping traders look at helping themselves time which options that they need to be invested in based upon how long it's going to take to reach the target levels, how long it's going to take for patterns to develop, so that they're making sure that they're timing their entries and timing their targets correctly. And so when I'm working with people on options, that's mostly where we are focusing at. Not just the direction, like directional strategies, but really a large focus on time strategies, how long it's going to take to hit certain levels, because that's really one of the most important things with options. Hold on just a second, guys. A little bit of tickle there. I didn't want to cough in your ears.
Hey, Toni, would you just getting a number of messages saying, can you give us your email address again? Everybody's very interested in learning more about your services.
Of course, really the easiest way to get to me, this goes to my email address, is if you type in ToniHansen.com, and there's a contact button at the top. That basically goes straight to my admin, and he forwards them to me. If you want my direct email, it's info at, and then it's trading from, here we go, I can type this in. Info at tradingfrommmainstreet.com. It's a little long, but it's an easy one to remember. It's just tradingfrommmainstreet.com, all spelled out. And that literally goes directly to me, and that is the fastest email address to reach me at, because like the Toni at Toni Hansen, for instance, is been in use for like over a decade and is swamped with spam. So I wouldn't recommend that as the fastest way of getting a hold of me, since I tend to check it on the weekends when I have more time to sort through all of the garbage that's in it. So if you want to reach me directly, do the info at tradingfrommmainstreet.com, or go to ToniHansen.com and just click on Contact Me or Contact Toni, and that will get to me as well. So again, this special offer here, the Market Timing Guide 159, and this link here for the specials actually gives you the option to look at a lot of the different courses that I have to offer, like my 5 building blocks course, which is the 5 technical signals you should not trade without. That actually goes into those 5 building blocks of price development. So if you want each of those in detail, that's actually about a 10-hour course, audio, video, and there's over 400 pages of text. And I really can't remember ever getting a bad review at it. A lot of people are like, they just want more, which but it does take you a while to get through that material. So if you're interested in really kind of diving into these building blocks and how to put them together, these are some of the things that I would suggest checking out. I really put these courses together because I was doing a lot of one-on-one mentoring, one-on-one work with individual traders. And what I found was that even with traders that came in where they'd been trading for a couple of years, I kind of had to start over and help them reprogram, I guess, how they looked at technical analysis, and was repeating the same things literally over and over again. So instead of taking all of that time to do that one by one, I put them all together in the courses to kind of give you a really good head start. I do still do one-on-one mentoring. So for those of you that are interested, I have a very limited number of clients that I take, of course, because I usually would do them in the late afternoon or on the weekends. So if you are interested, contact me at one of those, info at tradingfrommmainstreet.com or ToniHansen.com. I'm going to go ahead and turn things over to Steve here, because I see we're out of time. But if you have any additional questions or anything that I didn't get to, just email me, and hopefully I can get back to you pretty quickly. So thank you, everybody, for showing up today. I really appreciate it. And look and keep an eye on that ISE schedule, because there are classes literally every week that they're putting together. Here's the upcoming webinars, actually. So you can see a lot of great people on this list, and I think that you'll really enjoy them to help really further your education. And a lot of these people do get into more of the advanced option strategies. So if your focus is purely on the options, then these are some to check out. The next class that I'm going to be doing, I believe, is actually going to be focusing on the ETFs. And we're looking sometime in April for that. But I'll give you an update on that on my website as well. So if you're on my mailing list, it's a free list. You'll get my daily market commentary and basically notifications for the free upcoming webinars that I'm doing, that sort of thing. So just pay attention. So thanks again for everybody being here, and I will see you again soon.
Toni, thank you very, very much.
Thank you, Steve.
That was Toni Hansen. She did a wonderful job getting so many comments And as Toni said, you can go back and listen to her previous presentations as well as today's by just going to the archives. So www.isc.com/archives. You can go back and listen to Toni's presentation, the couple that she did in 2010, 2009. Toni's been with us for quite a bit, many years now. And Toni does a lot of, she's on the road. She was just at the New York Traders Expo. So, you want to keep an eye if you live in the New York area. She'll probably be up here, well, especially next year, but maybe at a Vegas show. I don't know. Toni travels occasionally. But other than that, you can always catch her online. And if you're interested in her services, you know where to catch it at. And I'll go back to that. It's info@tradingformainstreet.com. Yes, info@tradingformainstreet.com. And you can contact Toni Hansen.
Oh, yes. Steve, I wanted to mention the next expo I'm planning on will be in Dallas in June. And I'm going to be doing a 4-hour seminar at that one, too, one of their paid events that is one of the longer sessions as well. And then we're doing an event, some girls and I, Linda Rashke, Carolyn Borden, a couple of us are looking at putting together a weekend event up in Chicago in June as well. So keep an eye out for that. That'll probably be the last time you'll see me on the road for a while because we've got a little trader coming in August. So I'm going to be busy with for a little while.
Very nice.
So.
Good. Good. Yes, you need to stay home then.
Definitely.
All right, so just keep your eye. Toni will be in Dallas and hopefully in Chicago, and then she'll be at home for a while. So please make those events if you live close to. Of course, it's not that hard to fly into Dallas or Chicago, and it's probably worth it. I would say it's worth it. 4 hours of Toni Hansen, you're going to really enjoy it. Toni, thanks so much.
Thank you.
I just want to remind everyone that Steve Mizik will be with us next week. He's from the Online Trading Academy, then Raggy Horner, then Jack Crooks, and Price Headley, and Jason Ayers. So those will be the next 5 guest panelists, guest speakers here at the ISE in the next month or so, talking about currency options. And I want to remind everyone that as soon as I log off this, I'm going to log back on and present ETF options, covered calls using ETF options. I'll be the presenter. I'll be talking about what you should be looking at when you're doing covered calls, the advantages, the disadvantages. So if you're interested in learning more about that strategy, please join us just in a brief moment or two, although we'll get started in 25 minutes. But I want to thank Toni Hansen. Toni, thanks so much again.
No problem. Take care, everyone. Have a wonderful continuation of your week.
Thanks, Toni. So, Toni did a great job. I want to thank all of you, the attendees. Great questions, great comments, and please join us again for next week's FX webinar and for the next ETF webinar that will occur in just about 25 minutes. And please listen to all the archives as they're of great value. I hear this from many, many traders. They go back and they listen to these webinars over and over and over again. So please go back and listen to the archives. Thanks so much. On behalf of the International Securities Exchange, this is Steve Meisinger wishing you a safe and happy trading day tomorrow. Bye now.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.